Hi there, welcome to Nepi Invest. In today's video, I'm going to be focusing on a company called Playside Studios. This is a video game developer, if you can't tell by the name of the company and their logo. And I really had to touch upon this company now because their March quarter results were quite stellar. In fact, they produced $8 million in operating cash flow. So this is just in the one quarter. And I think the questions that I have and the market has is the majority of that operating cash flow is because of a sort of a one-off event. I'll talk about that later in the video. And the market is questioning whether this company can continue generating those sort of cash flows in the future. More than likely not. But the company is operating cash flow positive. They have a fair bit of cash on hand. The value of the company is quite high. I think about $200 million or maybe even more than that. But they do have plenty of video games on offer in the mobile section, also the PC and virtual reality area. So let's get stuck into it and look at some facts in regards to Playside Studios. Now, before we look at some of the facts in regards to Playside Studios, just a few comments in regards to some of the games they have created or developed. And if you do go to their website, they do have a fairly comprehensive list of all their games. And they do have a couple of divisions, so mobile games and also PC and virtual reality games. And just before I recorded this video, I went to the mobile games section. I just wanted to see some of the games they have developed. And I actually did click on some of the games, and it actually took me to the App Store. For instance, Animal Warfare seems to be a fairly popular game. It has 67,000 ratings and an average rating of 4.8 out of 5. So that seems to be a fairly popular game and highly liked as well. There was another game I clicked on. I didn't click on every single game. The other game I clicked on was Jumanji Epic Run. This does not seem to be a popular game, only 285 ratings and an average rating of 3.9 out of 5. But the main reason I know about Playside Studios is their game Dumb Ways to Die, because a lot of the cash they have generated in the March quarter was because of this particular game, in particular because of NFTs. And Dumb Ways to Die is nowhere near as popular as Animal Warfare. In fact, only 2,000 ratings for Dumb Ways to Die and an average rating of 4.3. So quite a few games in their mobile games section, almost heading towards 50 games, maybe not that many, but a lot of games. And in their PC virtual reality section, there is one game that keeps popping up anytime I have a look at Playside Studios, and that is Age of Darkness Final Stand. Now, I'm the sort of person who won't play those sort of games. I'm more likely to play mobile games, but only those sort of games where I only have to pay attention for maybe a few minutes. So I'm not a gamer at all. I would not describe myself as that. I actually get bored when I start playing games, and particularly those sort of games, you have to pay attention for hours on end. But that's just me. A lot of people out there are gamers and they can play games all day long. That's just not me. Everyone is different. Anyway, back to Playside Studios and a few facts in regards to this company. It was founded in 2011, so it's been around for over 10 years, and it only has been on the ASX for not quite 2 years, so about a year and a half. Listed on the ASX 17th of December 2020. When we talk about the CEO and the co-founders, there's a lot of skin in the game. And I won't try to pronounce some of the names here. It does seem like they are, I won't say they're Greek run, but the founders have, or the families have a background in Greece, or that's where they do come from. Jerry Sakas, he is the CEO and co-founder, 19% holding, 19.7% holding. And two of the non-executive directors are also co-founders, and combined, they have a 39% holding in Playside. So combined, all the co-founders have about 60% holding in this company. So there's about 40% otherwise, which means you might think this company is illiquidly traded, but that's not so. There is a fair bit of liquidity when it comes to Playside Studios. And the current market cap of this company at a share price of 55 cents, and with the volatility of the market, have a check of the share price of this company right now to get a true representation of the market cap. But at 55 cents, the market cap of Playside Studios is 215 million. So there's a lot of interest in this company, a lot of particular, I won't say fund managers, but I have heard a couple of fund managers say that this company is, I won't say they've hyped it up, but there is a little bit of hype there. So I think one person said this is a company you want to hold for the long term, that sort of thing. And the T code for PlaySide Studios is PLY. And in fact, I think one of those fund managers was asked the question, what is one company on the ASX that could change your life? And they gave PlaySide Studios as that one company. So they believe that PlaySide Studios is going to grow significantly from here over the next 5 to 10 years. And it could change your life. Doesn't mean it will. They're just saying it could if everything goes right for the company. Now on to looking at PlaySide Studios March quarter results. But before we look at the most recent March quarter results, I just want to go back to last year's March quarter, and this would have been their first Pennies 4C that they released to the market. More than likely, I would have been interested in PlaySide Studios at this point in time, simply because they were newly listed, only 3 months on the ASX at this point in time, and I want to see at least 6 months of history. The other reason I would have been interested in PlaySide Studios at this point in time is they were operating cash flow negative by $2.3 million in this particular quarter and only generated $2 million in cash receipts. They had plenty of cash on hand, $13.3 million of cash on hand. But I wanted to see whether receipts could grow through time. And I wanted to see if the company could become operating cash flow positive before I became interested in this company. So let's see how this company has grown over the past year. And the very fact I'm doing this video and have stated that they did generate $8 million in cash flow in the most recent quarter probably suggests that this company has significantly grown in the past year. Now let's just see how this company has grown over the past year. Cash receipts up $12.8 million from about $2 million to $14.8 million. And the most important thing here is spending did not grow all that much over the past year. Advertising and marketing up $900,000, staff costs up $600,000, and administration costs up $700,000. So cash receipts growing at a much quicker rate than spending. That's exactly what you want to see. That probably suggests there's a bit of operating leverage, bit of scale here, but that's not the whole story. I'll talk about that in the next few slides. And so because they grew cash receipts at a significantly greater rate than their spending, the company was operating cash flow positive by $8.5 million. And the majority of that fell to the bottom line, and the cash on hand increased from $33 million to $40.1 million. So this company has a lot of cash on hand, and what they do with that cash on hand is going to be very important in the future to the growth of this company. So I am actually interested to see how the management of this company allocates the cash on hand. Now, it's very important to be aware of how this company did generate such fantastic operating cash flow for the March quarter. And this is an announcement from the 7th of February 2022 in regards to their first Web3 project titled Beans by Dumb Ways to Die on February 4th by a Beans NFT launch. It achieved $8.38 million in net revenue after all third-party fees. So the question I have, and maybe the market has these questions as well, is this just a one-off? Is these cash receipts we saw in the March quarter all because of this Beans NFT launch? So I'm really interested and intrigued to see how this company performs in the current June quarter. If they can remain operating cash flow positive, if they can see significant increases in their cash receipts from not the previous quarter, but the December quarter we saw 2 quarters ago, then I think this company is on the right trajectory. So I'm really interested to see PlaySide Studios' June quarter results. Now, ideally, I like to see at least 8 quarters of receipts history before I determine whether there's any trend in receipts. I want to see an upwards trend in receipts through time. And for PlaySide Studios, because they listed on the ASX in December 2020, we only have 6 quarters of history, but the trend does look promising for this company. If you take away, say, $8 million in the last quarter, that means you get a number about $6.87 million for the March quarter. And even then, we do see some really good growth in receipts over the past few quarters. More than likely, for the June quarter, receipts will decrease. If it doesn't decrease, that would be a significant win for this company. And more than likely, the company won't be as operating cash flow positive as we saw in the March quarter. But if they can maintain being operating cash flow positive in the June quarter, then maintain that into the September and December quarters, this company is looking way more interesting. And I think they can achieve that. Whether they do achieve it, that's up in the air, but I think there is potential they will. So things are looking up for PlaySide Studios. I do like this company, but there is one thing I don't like about PlaySide Studios right now, and that has really nothing to do with the company itself. It's just sentiment in the overall market. And that lack of sentiment or negative sentiment in the overall market is quite apparent when you look at PlaySide Studios, a chart right here. This is their daily chart going back to when they listed on the ASX. Share price low for this company is around about 25 cents or just above 25 cents. And this actually does illustrate why I prefer to wait at least 6 months before I buy into an IPO, because the share price bounced in the first few weeks of trading from about 25 cents all the way to a high of about 50 cents and then fell away over the next 4 or 5 months. In fact, from January 2021, share price fell back to 25 cents by July. So over a 6-month period, the share price fell back towards its IPO price. And then we saw a lot of interest come in for this company from July all the way through to the end of 2021 into start of 2022. Share price rose from 25 cents to a high of about $1.40, which was reached in February of this year. But the share price has been under pressure ever since then. It has fallen from about $1.40 all the way to about 55 cents. It is heading towards 50 cents as we speak. And that's the main reason behind the share price dropping here is just the overall negative sentiment, particularly in tech companies. And that's why it's highly important that PlaySide Studios remain operating cash flow positive, remain having growing receipts, because if they can show the market that this company is looking attractive at today's prices. But because of that negative sentiment, the share price could fall a lot further from here, depending what happens in the overall economy. And I'm not sure if there's any relationship between recessions, bad times, and whether people stop spending money on mobile games and PC VR games. I think there wouldn't be. I actually think people would start spending a little bit more as a good distraction away from the bad times. But I'd like to see some research on that, sort of like the lipstick effect. So during recessions and bad times, lipstick sales actually go up. And there is some reasons behind that, which I won't get into in this particular video. So things are looking interesting when you look at the financial state of this company. But when you look at the chart, things are looking or going in the opposite direction to what you would want. But the further share price falls in this company, the more attractive this company becomes, in my opinion. That's all I have for this March quarter video for PlaySide Studios. I think it might be the first time I've looked at this company. This company had an absolutely stellar March quarter for financial year 22. There are some questions about the next few quarters I have around this company, but if they can maintain being operating cash flow positive, if they can maintain the growth in receipts, maybe not quite as good as $14 million we saw in the March quarter, I think there is something to like about this company. Again, the only thing not to like about PlaySide Studios is something that is completely out of control of management, and that is the chart, the share price action over the past few months. But if things turn around in the economy, and if sentiment changes in the economy, if we start to see the end of this bear market or potential bear market, when you look at the ASX, this company could become an attractive proposition, particularly if the valuation of the company falls further from here. If you have any questions about PlaySide Studios, maybe any other company on the ASX, I would love to hear those questions. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.